This strategy will create generational wealth for my family. And the strategy I'm referring to is the 15-minute opening range breakout. And right now, let me just show you how simple it is to learn this strategy so you can start implementing it into your trading today. Step number one, we're going to chart out the high and the low of the first 15-minute candle of our New York AM session. And then we're going to go look at our higher time frames to see what our bias on the day is. In this example, I see that we're already very bullish because we've inversed a bunch of hourly bearish for value gaps. And then we created an hourly bullish for value gap that price is now delivering from. So now I'm waiting for a break above this level and a retest of a fair value gap for the longs to really step in. But I also need to look for where TP is going to be. Where does price want to target? In this example, I see that we have our Asia high resting above, which will be a very good buy side target. I can also use my Fibonacci retracement tool from the top to the bottom to find my first standard deviation level as a good first TP. But this is now when we need to find our actual entry in the market. So I need to see a break above and a retest of a fair value gap to take my entry. So the first fair value gap I see is on the 1 minute time frame after the break above the opening range. But what I also notice, if I go to the 5 minute time frame, we created a 5 minute bullish fair value gap here. So that's really where I'd want to target my entry, because the higher the time frame, the better confluence I'm going to have. So I'm going to grab my long position tool and get my entry once price retraces into that level. I'm going to keep my stop loss below the wick of that fair value gap or below the 50% of that fair value gap. And then I'm going to go target that first standard deviation and that Asia high for my TPs. So let's see how this one plays out. We have our entry off the fair value gap. First TP gets hit and second TP gets hit just like that.